I would like to introduce Dr. Amy Hagerman. She is from OSU Extension and Food Policy Specialist, and she's going to tell us a lot about the Farm Bill in a concise, easy to understand way.
Thank you very much. When you get tasked with explaining federal legislation in a concise, easy to follow way, it is a tall order. But my name is Amy Hagerman. I am from the Department of Agricultural Economics at OSU, but the majority of my appointment in the department is actually extension. That means I'm out talking to farmers, talking to ranchers, talking to individuals and communities, and trying to make that connection to help them understand what changes happening in legislation are actually going to come down and affect them. So that covers a lot of ground, a lot of different legislation, but today we're going to focus on a piece that has come out recently and is really important for our agricultural industries across the board, and that's what we commonly call the Farm Bill. Now, there gets to be some confusion whenever you start talking about farm bills, right? Because there's any kind of bill that's associated with farming could be a farm bill. But whenever we talk about the Farm Bill, usually we're talking about that big piece of federal legislation that comes out once every 5 years and covers a whole lot of ground. The most recent piece of legislation is the Agricultural Improvement Act of 2018 that was signed into law December 20th of 2018 and actually has been enacted starting this year. So these changes are still relatively new. Some of these changes are still being implemented now. I'll also say this is about 400 and some odd pages worth of material, and we're going to skim the treetops on a lot of these programs. And I will tell you, there's a lot of experts out there in that hallway from the different organizations and agencies that actually implement these programs. So if you have really detailed questions, they're going to be able to help you. Also, I'm a really big fan of this overview of all the Farm Bill programs that's out there on the USDA tables. It provides the name of each one of the programs, and it provides a brief description of what it is so that you know if that's really going to apply to you and your operation or not. So if you're interested, if you want some more details, I suggest you go out and engage with some of those individuals from the organizations that actually implement those programs. So just a little bit of background then about this Farm Bill that just passed. The previous Farm Bill was passed in 2012. It took almost 2.5 years to get that Farm Bill through from beginning to end. This Farm Bill took less than a year. It moved through very quickly through the entire process. And there are a couple of reasons for that we'll talk about here. But it was first introduced in both the House and the Senate Ag Committees. Why? Because those committees have different responsibilities. And the Farm Bill is so big and covers so many different areas that we have different pieces that come from each side. So they both introduce a Farm Bill out of their different committees. There we go. Those were voted on in their individual sides of the legislature. And then it went to conference on September 5th. What does that mean? That means now you've got to take those two individual pieces of legislation and you've got to combine them and reconcile them into a single piece of legislation that would be our enacted Farm Bill. A new report came out of that committee on December 10th with all those reconciled agreements. It went to a full Senate vote on the floor on December 11th and on the House on the 12th. Now, I want you to pause and look at those passages. This was a strong bipartisan support for this Farm Bill. That's a very... I may have to... Hear me? If I just have to talk a little bit? Okay. But I may just have to be really loud. So we got a very strong bipartisan support for this particular Farm Bill. Why? I think at least in part it's because of the timing. You know, we had some pretty good crop prices back when the last Farm Bill was passed. We have some very poor crop prices right now. So I think that was part of the motivation, part of the drive to actually get this passed in a timely manner. I would also say this Farm Bill was not radically different from the previous one. And that makes it a little bit easier to pass at the federal level. Hello? There we go. I had a colleague who said that this is the same birthday cake that you got at your birthday last year. It just has more sprinkles and an extra sparkler. So that's how he described kind of the differences in this farm bill. They tried to fix some things in this farm bill, which did have a lot of really radical changes in it. But, we good? It's out of batteries. Oh, okay. You change those out. I'll just be really loud for a minute. I can be really loud. So the White House...
Check, check, check.
All right, thank you. So now we have implementation that's ongoing on these programs throughout 2019 and into 2020. So we may talk about some programs that we still don't have the final regulations out on the Federal Register yet on some of these, but they will continue to roll out. Okay, so what is this? The Agricultural Improvement Act of 2018. Whenever we talk about this, you kind of go back to your high school civics class. This contains both authorizations and appropriations, which means we got a lot of programs that are either new or continued, and there's got to be money attached to those programs. You can put a program in place, but if you don't have any money to actually implement it, it's not going to go anywhere. And that's where the appropriations part comes in. It's an omnibus bill, which means you're cramming a whole lot into a single bill and getting it passed. And we'll talk about the different programs that are covered in these 12 titles. But it covers both urban and rural interests. Why do they do that? Because that's what it takes to get a farm bill passed. We have so many more representatives coming from urban areas than from rural areas that you need that combination of interests that are interested in feeding everybody, just like you guys are interested in feeding folks. It is a baseline farm bill. What does that mean? That means there's no new money for new programs. Your birthday cake that we talked about is the exact same size as your birthday cake on your last birthday. So if you want to expand some programs and cut one wedge bigger, that means another wedge is going to have to take a cut. That's another reason we didn't see a lot of radical changes in this farm bill, is because it's a baseline bill. Now, historically speaking, we have the big four that represent 99% of farm bill funds across a year. The greatest portion of that are nutrition programs, mainly that Supplemental Nutrition Assistance Program, or SNAP, that some of you may be familiar with through your different constituents that are coming into your markets. That represents the majority of the spending in this program. It's also going to include things like school lunch programs, healthy eating initiatives, and the kinds of grant programs that are associated with healthy eating initiatives. The second of the big four is the commodities title. That's for our farmers out there who are planting crops, who need some safety net support. That crop insurance falls into that as well as another one of those big four. And finally, the conservation programs. We heard from NRCS this morning about some of the programs that they have. And those four titles represent approximately 99% of the spending outlays that are associated with the Farm Bill. The remaining 1%, there we go, are in a variety of areas: trade, credit, rural development, forestry, energy, including bioenergy, horticulture, which we're going to talk about today because it got a lot of attention in this last Farm Bill, because that's where the industrial hemp rules live. And then also the miscellaneous title, which is also important in this Farm Bill because it contains some emergency preparedness funds this time around. So obviously the Farm Bill is a very wide-reaching piece of legislation. There's a lot of moving parts. I can't go deeply into all. Nobody wants to come and spend their dinner time here with me talking about the Farm Bill. So what I'm going to do is I'm going to highlight some of the areas where I get the most questions whenever I'm talking on the state. In the last year, I have been all over the state, corner to corner, talking about Farm Bill programs. So these are what I would say my most frequently asked questions associated with the Farm Bill. And we're going to start off with the commodities title, particularly because of the low commodity prices that we've had for a lot of our crops here in the state, this has been an important title in these last couple of years. There are two main programs by the commodities title. The first is the Agricultural Risk Coverage Program, which is a revenue protection program. Why is that important? If you have a crop that has historically had prices that have remained pretty high, but you're in an area where you've had a lot of weather events that have really affected your yield, and your yield has been low in some years, then that revenue coverage program is going to help protect you from the years when you get really low yields. The other one is the price loss coverage program, and that's mainly a price. So what that means is that if you are raising a crop that has had a lot of volatility or has even had some really sustained low prices in recent years, then you can get some price coverage for your crop. These are free programs to sign up for. They do require a lot of paperwork with the Farm Service Agency, and we'll talk about that a little bit more. So first, very, very important thing out of the commodities title. If you have base acres, which are your historical planted acres, not what you're currently planting, on your farm, you have until March 16th to elect to either ARC or PLC if you want to sign up to those programs. That's a really important date because you're foregoing your 2019 payment if you don't get signed up by that date. So let me just say that right up front. A really interesting change in this particular farm bill. In the previous farm bill, you had to lock in for a full 5 years to either revenue protection or price protection. Well, you know, prices were pretty good when the farm bill first passed. They were not very good by the end of that farm bill period. So this time around, you're only locking in to the 19 and 20 crop years, and you have the flexibility to change that election in 21, 22, and 23. So if something happens in trade, if something happens in another country that causes prices to go up, and you feel like you really want to go for that revenue protection instead, then you can make the switch in later years. I think that news for some of our producers. The next thing is that there is an opportunity to update yield for the price loss coverage program. How that calculation works is that price difference between a fixed reference price and the actual market price is multiplied by the yield on your farm. The previous farm bill, that yield covered some drought years. And so now there's an opportunity to update that yield to a new series of years that has fewer drought years for some of our producers in the state, particularly in the western half of the state, so that they can actually have an opportunity, if the PLC triggered for them, that they'd be able to get a little higher payment to reflect their usual yields, not the yields in those years that were droughty. Now, the ARC program, the revenue program, has some changes in it as well. One is breaking out irrigated and dry land crops. Why? Well, it's, again, the same calculation issue. If you're multiplying a payment rate times a yield times a number of acres, a yield's very different if you have an irrigated crop or a dry land crop. And so some of our counties have that breakout between the two. It's also going to allow some trend adjustment to the yield, and it's going to use crop insurance data on some of the data instead of NASS data. Again, this is just really some technical changes. These are those sprinkles, those technical changes on the cake that are going to just hopefully make this program work a little bit better for some folks. The next program I'm going to talk about are conservation. Again, this is one of those big four that we had talked about. Conservation programs in the Farm Bill are really focused on helping you manage your natural resources and improve that most important resource you have, which is what you're growing on in the ground, and water management. So NRCS talked about these a little bit this morning. Just to highlight a few changes on these, one are the funding changes associated with these. So we talked about the EQIP program, Environmental Quality Incentives program. It's a really targeted to certain conservation activities. We expect to see some information out of NRCS on what those are going to be, and they're going to be specific to the area where you're working. And again, we expect those out very soon. EQIP actually had a funding increase under this Farm Bill, so there may be more opportunities to accept applications under that program. Now, on the other side of the coin is the Conservation Stewardship Program, which overall had some funding decreases in this Farm Bill. But it also had a big change, which is this treatment of land and grass. So for farm numbers that have this historical crop base that we were talking about for ARC and PLC, but that they have been planted to grass from 2009 to 2017, they're not eligible to enroll in those ARC or PLC programs under this Farm Bill. Instead, they're eligible to enroll in this Grassland Conservation Initiative. Now, if this actually applied to you, you probably already received a letter in 2019 associated with that, or a third round of letters just went out. So if this applied to you, you probably already know about it, and you've probably already had a chance to sign up for the Grassland Conservation Initiative. But this is going to be a continuous enrollment process through this entire Farm Bill all the way out to 2023. Now we're going to talk a little bit about credit. Now some of these programs could be very helpful to some of our producers out here in the audience, because there were a lot of changes made in the credit title, particularly the raising of loan limits. And this is going to vary depending on the kind of loan you're applying for. So without going into the details of all the different loans, I hope if you were interested, you were able to attend the FSA loan session that was held in the last breakout. But there's also a document online that's your guide to the FSA loans that will break out the difference in the requirements and how that partnership with your local bank works for the direct and guaranteed loans. But they can apply for farm ownership, for down payments, for equipment, for emergencies. If a natural disaster happens, we had a lot of flooding in the last year in Oklahoma, and that affected a lot of people. And there are options for emergency loans under this program as well in specific kinds of conditions. There are also programs specialized for young, beginning meaning less than 10 years in business, women, minority, and veteran producers. Now, this is really good, and I'll tell you why. Because they run out of that loan money before the end of the year, especially with these increased caps on the limit of the loans. That means they can make fewer loans over the course of the year. But they have money set aside for these groups. So if you can qualify in one of these groups, you're less likely to run into an issue where if you're applying for a loan towards the end of the year, they've already run out of their money for the loan program for that year. So keep that in mind. Two big changes in the horticulture title that I think are going to be important to this group: the LAMP program, and then maybe there could be some interest in the industrial hemp program. But first, let's talk about LAMP. So LAMP is actually combining two different programs that existed before: the farmers market and local food promotion programs, and the value-added agricultural product market development program. I like LAMP a lot better than saying those two really long long names for different programs. Why did they combine those two programs? Because you have to reach a certain limit to get baseline in the Farm Bill, permanent mandatory funding for these programs. So by combining them, they were able to get permanent mandatory funding for these programs going forward in the future, and I think that's good news for a lot of you guys. The grant requests for the different LAMP programs went out last year in April and were due in June, so we should see some 2020 information sometime pretty soon. But these have a lot of different reasons for continuing these different programs for you guys, but it's really about connecting the right resources in the communities and being able to push forward some kind of innovative and some new opportunities in communities. The reason I wanted to talk about crop insurance after horticulture is because there are some specific things in here associated with crop insurance for hemp producers. But the first thing I want to say is for our cotton producers, there's a product called Stacks that is still available if we have any cotton producers here in the room. However, you cannot enroll in ARC or PLC to do that. ARC and PLC is a two-step process. First, you have to elect, and then you have to enroll. You can elect in ARC and PLC or PLC, but you can choose not to enroll and take the Stacks product instead. So if we have any cotton producers in the room that would like more information on that, please come up and see me afterwards, and we'll go into more details. Another issue is that enterprise units can now cross county lines. So if you're thinking about getting crop insurance payments and you've got a piece of land that actually crosses a county line, it would be kind of, you'd get a payment on one side for one county and you get a payment on the other side for another county. Now those enterprise units can actually go across for a contiguous piece of land. Also, it clarified cover crops as good farming practices, but one of the big changes people are interested in is this authorization of hemp for crop insurance coverage. Other than that, not a lot of big changes in crop insurance, particularly with some of the perils that we've had in recent years. This was a really strong voice from agricultural producers who said, we need crop insurance, we need it to remain in place. Please make sure that crop insurance is included intact in this farm bill, and the legislators listened, and so we do have a very few changes in crop insurance in this farm bill. One thing before I get into the industrial hemp, first we're going to talk about a little bit about this dual-use crop insurance. This was a change that's really impactful for us here in the state of Oklahoma because of how many people we have that graze cattle on winter wheat. This will allow producers who do that to have two different insurance products. They can both have a rainfall product for their grazing period on their land, and they can also have a multi-peril grain product for the harvest of wheat that they have on their land. So I think this is something that has the potential to be really useful for us here in the state of Oklahoma. It wasn't used really heavily in 2019, but I think some of that is because of the rain we had received early in 2019, and there was some hopes that there wouldn't be a need for rainfall protection. Industrial hemp insurance, we did just last week have the announcement from RMA on what that product will look like. The big thing that I really want to draw your attention to, and this was a big, this was a big question as this product was being developed. Will it cover THC levels going above that 0.3%? And there's some additional interpretation there in terms of the report of what that THC is. But the big point here is that it will not cover THC levels in excess of the 0.3%, and it will not cover damage or loss of value in the crop associated with not being able to get it to a market. So that's just something I want to draw people's attention to in terms of this multi-peril crop insurance product. There we go. Okay, so now let's get into the nutrition title, which I think has some elements that a lot of you will be interested in. The first is this Gus Schumacher Nutrition Incentive Program. That was a big kind of name change in this farm bill compared to the previous one. This may be kind of associated with some of the Double Up Oklahoma, which I think I saw those folks come in here a little bit ago. But we just had a session on that, so if you'd like more information on that, you can talk to those folks for more resources. It's late in the day. Also, the Senior Farmers Market Nutrition Program that some of you also may have been involved in was re-upped in this farm bill. And then the healthy food, that should be healthy food, financing incentive was also re-upped in this farm bill. So there were a lot of recommended changes to SNAP at various points in the process of passing this farm bill, but the end product on SNAP was really very close to what was in the 2014 version of the farm bill. So you'll see a lot of the same programs that were available in previously. In the rural development title, there's going to be some investments in your rural communities in terms of telemedicine, really ramping up that additional funds for broadband access in rural communities. We had a lot of success with that here in the state of Oklahoma, and we took a lot of advantage of those rural broadband programs. The amounts of money available for those programs was actually increased in this farm bill, so there'll be continued opportunities for that. Then there's also this Rural Innovation Stronger Economy Grant. Oop, I thought I had more information on that. Stronger Economy Grant Program. The availability of funds for that program was also increased in this farm bill. So there are a lot of opportunities to apply for grant dollars under this Farm Bill for your local communities, for nutrition programs for your communities, and for your farmers markets. Also for our young, beginning women farmers, veteran farmers, there's going to be opportunities to apply for very good incentives for grants, loans, and crop insurance as well. There's higher subsidy levels for crop insurance for some of those programs as well. So I would really encourage you, if you would like more information on any of these programs, talk to the various USDA agencies. You've got county offices in every single county who can help you understand what these programs are and can really talk to your specific farm. There's a lot of details in every one of these programs. I will not tell you you won't be drowning in paperwork to apply for most of them, because some of them have a lot of paperwork associated with them. However, it can really be, and I've had producers tell me this, it can really be the difference in years when prices go down or when a natural disaster happens. It can make a big difference for them. So with that, I will entertain any questions you guys might have, or I can point you to the right agency that can answer the question if it's more detailed than I can answer. So the question was about the CRP program, right? The Conservation Reserve Program. That is a set-aside program for land that's really, it fallows land for a period of time in order to increase soil health. There would be some additional kind of conservation practices that could go along with it, like cutting down cedar trees, creating wildlife habitat. And so that program is really a set-aside program. It's different than the Working Lands programs, which is the Conservation Stewardship Program and the Environmental Quality Incentives Program. Those are programs where you could still graze on those lands for those two programs. As I had said, there are programs that are being implemented still right now. And so if the Federal Register notice hasn't come out on it yet, and to my knowledge, the Federal Register notice hasn't come out on it yet. Has anybody else seen it come out on the Federal Register yet? I haven't seen it yet. So once that Federal Register notice comes out and we actually have the details on it, you will find that there will be a lot of people who will be like, we don't know what it is until the official comes out. And so that's probably what they're waiting on, is for the official to come out on the Federal notice.